Craig Simak. I'm here from the 6th Annual Clean Tech Investor Summit, and I'm joined by John Rockwell, who's one of the pioneers in the clean tech space. John is one of the managing partners with Element Partners, correct? Yep. Which is probably, as far as from my understanding, one of the first, if not the first, pure play clean tech venture capital firm. Is that correct?
One of the first. There were a few that were formed in the 90s, but of the new wave, we were one of the first. Yes.
Got it, okay. So now, can you just tell us a little bit about your current portfolio, what type of companies you have in there, and then a little bit about what you're forecasting, what you're seeing coming down the pipe, and what type of clean tech companies the firm is excited about.
Element has historically done half of our deals early stage and half later stage revenue. And we just raised another fund. We're probably going to focus more on the later stage for the near future.
Interesting.
But my portfolio ranges from, I have 2 energy storage deals, 2 that you could call biofuels, are the ones actually wastewater to product.
Okay.
PowerGenics is a nickel zinc battery company. Dia Energy is a flow cell battery company.
Right, and PowerGenics is based in San Diego.
Exactly.
Dia is based in India, correct?
It's actually headquartered in Fremont,
Oh, okay.
California. That's where the R&D is, but the first market's in India, and we'll end up doing most of our manufacturing in India.
I see. So now, the transition to some later stage investing, is this purely because of for follow-on rounds into the existing portfolio companies, or is it that you're actually looking at new investments in the later stages?
New investments in later stage deals. So historically, 50% of our deals have been Series A,
Right.
B, high technology risk.
Right.
And then 50% have been revenue stage companies.
Interesting.
And so we're just going a little bit more emphasis on the revenue stage.
Okay.
The thought is that there's a lot of capital on the sidelines, there's not a lot of people willing to make investments. So the thesis is that there's companies that have been funded the last few years that are going to need capital.
Got it.
And hopefully we'll be able to make investments at reasonable valuations.
Got it. So what are some of the areas that you're looking at that maybe you haven't already been invested in?
Okay, so maybe I'll go through the areas that
Sure.
we like. So,
okay.
So energy storage we like. We're going to continue looking at that. We've done some stuff in the biofuels area, but not basically with waste streams or cellulosic feedstocks that are cheap. We've done stuff in supply chain. We've done stuff in biochemicals, biopesticides, a number of deals in the water services side. We've actually done some in traditional energy, oil and gas and coal, cleaner oil and gas and coal.
Okay.
Because those are still going to be big contributors to our energy resources.
Right.
And so if you can make them cleaner.
So in your opinion, is there such a thing as clean coal?
Well, here's an interesting point. The answer is yes, if you're comparing it to petroleum. Because we're in a company called Excelergy that has a coal to liquids process. And they can take the coal to liquids process, combine it with a biomass to liquids process, and produce fuels, very high quality fuels, with a lower carbon footprint and produce same fuels from petroleum.
Interesting.
So you can use coal and have less of a carbon greenhouse gas impact than producing out of petroleum.
So what are some of the other areas then that you're looking at?
Right, so we're looking at things in the smart grid, energy efficiency like a lot of people are doing.
Have you made any investments there today?
We've got one investment in the smart grid. It's a company called Miartech. It's based in China actually, doing their development there. It's a power line communications chip. And the reason for doing it in China is that it takes 2-3 years to get into a utility and make the sale. And if you're in the States, you have a $500,000 a year burn rate.
So,
and in China, it's $100,000. And
wow.
so you can ride it out. And it did take them a couple years to get into their first customers, about 18 months. And they've been ramping up. And now the Chinese state grid is rolling out 275 million meters over the next few years, and they're in the qualification process right now.
So China and India, 2 areas that you're already invested in, are obviously tremendous markets.
Yes.
But now, how do you source deal flow outside of the U.S.?
Okay, so the only way we'll do deals outside the U.S. is if we've got a trusted partner. So in China, the deals that we've done have been either done in the States and we moved them to China. So Excelergy was done in the States, but the development was much cheaper to do in China, so we did it there. Miartec was done with DFJ Dragon, who I know, it's a Chinese fund that I know very well. And so they're handling stuff on the ground, take care of problems there. And Miartec's markets will eventually be global. So down the road it will be a moot point. But you need someone in the country that knows how to do business there and can navigate the problems.
So you foresee continuing to make investments in both China, India, and beyond?
Where I see it more likely is not so much making the investment in the companies there, but a lot of the companies that you invest in here, the markets are India and China. So Dia has a flow cell battery where where its sweet spot is in applications where there's frequent outages of long duration. That doesn't happen in the U.S. Right? We have a stable grid. India, it happens all the time. So we have a great value proposition. It's less than 1 year payback for our customers. That's easy to sell. Eventually, we hope to develop that technology where we can bring it over here and use it for renewable energy storage, or more likely for grid stabilization and grid management.
Yeah, well, energy storage, I can see why you're passionate about that space.
Yes.
It seems to apply to so many other areas as well.
It does, yeah.
So now, as an investor in these clean tech companies, like, what are you seeing as are some of the bigger hurdles and challenges?
Yeah. So one of the hurdles is always that if you compare it to IT investing or technology investing, there's an innovator die mentality in your customer base. So if you've got a better chip or better software, your customers will adopt immediately, because if they don't, they lose and they're out of business. In your clean tech opportunities, your customers are usually purchasing to improve profits, reduce costs. And so there's less of that life or death aspect. And they're usually established conservative marketplaces, so they want to try your product for months and try a little bit more for a few more months, and it may be 5 or 6 years before you penetrate the company, whereas in the IT market you may do it in 2 years. So it's a slower adoption cycle, slower to get qualified, slower to ramp up. That's a challenge, but totally manageable. You just can't get ahead of yourself. One of the big challenges is financing when you get into some of the projects, the bigger projects. So solar, wind,
Sure.
biofuels.